Welcome to TradeTheMBI.com. This is John. This report is for the 9th of September. And a beautiful move back to the 50% Morganacci line here as we continue to see softness. It's abating a little bit here where we have a little bit of a smoothing of the magenta, but it's still just underneath yellow. So just a brief turn up there won't take much to move it back. And we've also reached that minus 19 here, minus 21 for green on the DOC. We're getting into those little automatic pop-ups, and that doesn't mean it's going to be sustained, but usually you get a little bit of a reprieve. We're still extreme histogram below the red line, all negative, and that shakeout is pretty reflective of it. Even from when we were at the upper peaks, we were still fighting that sell. We had that brief momentary move before it broke back down, but we've seen relatively no change here from MBI blue to gray scenario, and until that turns around, you're still at a negative setup. September usually too, also a very difficult month, particularly in an election year, but it's one of those where, we've staved off Trump's not going to jail because they're doing a sentencing now after, so that evens things. And then you have the debate, of course, coming up, and the uncertainty with that. Definitely going to be interesting to see how the results are. I think if Harris holds on to not do what Biden did, then probably be a bounce coming off of her performance here. The NQ, far worse, from a 50% standpoint, it's like well below 38%. Actually, it was almost touching the 23%. But likewise, a similar reading. So now we're getting into a point where we're getting closer readings, even if the scale of where they're at isn't equal. The Nasdaq's been under considerably more pressure than the others, and not shocking. I mean, they've actually outperformed quite a bit. And then you have the continued uncertainty where the market was betting on a 50 basis point and minimum cut coming forward. Unlikely that's going to happen that quick, but this is the fantasy. You buy the rumor, sell the news. Of course, Treasury's way out of line with that. I mean, they're so far ahead. They're thinking that next year rates are at zero, but it's a bit early. And why would you want to be in Treasuries anyway, given that you're in a negative yield situation with the way inflation is? Even if you buy the government version of where inflation is, most people in the real world experiencing much higher inflation than that. The real bonus here is the oil dip, and this is relative to what's going on globally versus what we see economically in the U.S., but it's also a broader sign that there are global economic issues at play here that are negatively impacting the scenario, and that's something we've been waiting to see for some time. We knew that the U.S. was in pockets of recession depending on the region, and it was varying, but that's sort of grown now and sort of encompassed everything under the higher rates, and it's now having its effect. It took a little while. There was a lot of excess liquidity, but I think the Fed's going to be happy with the idea that they've absorbed quite a bit of that. The market elevated level probably is the only modest concern from their standpoint, but overall, they've slowed things down to where they think they've got a better micromanage capability now, which is always hubris, because at the end of the day, as long as the deficits are running at the extraordinary amounts they are, it's going to continue to put forward pressure on things, and they're not going to be able to do enough to stave that off. I don't know why I'm wearing the goggles. Don't read those. From a euro standpoint, we're looking at still elevated levels for no particular reason. Eurozone definitely is in recession already, has been. Germany definitely, as you can see, the potential for Volkswagen wanting to close plants, going bankrupt. France has its own issues. It's not a singular country situation. Is starting to develop at a global scale. From a gold standpoint, despite this, some people say, oh, well, look at gold suffered along with everything else. Well, that typically happens in market sell-offs because you liquidate those things that have been doing well so that you can cover your margin setups within your regular one. The same thing's going to happen for crypto. And of course, everyone will say crypto is dead as well. And again, not true. We expected this coming off of the halving for Bitcoin and that. And we're just right in between previous outflow levels that needed to fill back anyway from positive extremes. So none of this is outside of an expectation. You can just follow back here on my chart and mark them. And then on the low side, we had the 48.5. Of course, people would definitely go into, tizzy panic, but, as a return standpoint, this is far ahead of any other asset class you can think of. But as with all speculation things, they go up and down. ETH already approaching its 0% line off of these NBI white spikes, so in line. I don't see anything out of the ordinary with those. They're going to continue to vary. A little enlarged here from our 50K chart. You can see it's just been a continue at a brief moment where we popped up to the 50 NBI white spike. That's a simple, clean signal, and a return back to the zero. Didn't take anything from there, and then it literally didn't change with the NBI white leading the whole way through. We've just shifted on that a little bit earlier, and that has caused a little bit of a bounce recovery. And you can see that here, that's the post-market European action. If we go back to Friday's action, well, come on, grab it already. No, not cooperating with me. Well, if we look at the left side of the screen there, you can see how right after the post market, it fell finally now. So yeah, there it was. Early morning, big bounce. And that's kind of the early pattern that we've been seeing for the last week or so, just to open up to selling liquidations. And again, this is going to be the trade rotations based on who they think elections going to go towards, because that affects where money is going to be applied. Clearly, if you think Trump's in the lead, you're going to be moving out of the defense sector and moving into other ones, which I don't know why. I mean, he's spent a record amount for military as well. So, but those are the kind of cyclical little rotations that people try to play to gain advantage over who's in the lead and where they think policy will take money. So that's going to add to the volatility. And some people are just going to be wanting to wait on the sidelines, which is the other thing fear does. It causes people to freeze, not do anything. And that's typical in election years. People hold off on travel, things like that, until after they kind of know, and then they go back to normal life. So, same situation here with the markets. We'll continue to play the readings. The volatility is fantastic. You can't complain about it at all. It's exactly in line with what we thought would take place. So just following the paint bars makes it simple. As always, trade well. Anything relevant, I'll put on Skype chat. Have a good one.